All of you, looks like a big day for markets. The GIFT Nifty has already given its verdict. We are off to a very strong start after the fantastic exit poll results, which show a big win for the BJP and NDA. We have with us from Indiacharts Rohit Srivastava, who will help us navigate today, which is going to be a big trading day. Rohit, the GIFT Nifty has already given its verdict. We are already up about 700 points on the Nifty. What do you think? What kind of gap up opening do we see at start? Will those gains persist through the day?
So what we can use at this point of time is only some guide from history. It may look like some of these gains can hold, but many times what GIFT Nifty does and Nifty does can be slightly different. So we should actually watch the real opening. That is one part, but still I think a gap up seems to be on the cards. Second is if we end up discounting the numbers with the move today itself, how much would really happen tomorrow? But because do remember that after tomorrow, the IVs or the implied volatility, especially in the options market, starts to drop and go back to where it was before, which is like almost down to maybe 13 or 12 from 20 to 23. So those are the short-term things to keep in mind. The good news is that overall, even after last week's correction, we did not fall below the 20-day average, which is close to around 22,400 odd as a support. And that support holding keeps the overall upward trend intact. So that is, I think, the more important thing from the medium term, that even post this event, and if there is any positive, negative reaction tomorrow, eventually we should be headed higher in the coming weeks. I think that is the big picture. The short-term volatility comes with, if you go up a lot today, then tomorrow it could also end up being flat. That is what you need to just keep in mind.
Sure. Rohit, tell us about the derivative setup as it is stacked this morning, because there was a lot of talk over the weekend about how there will be a very big short covering rally this morning, and you said we can't really go exactly by what the GIFT Nifty shows. Tell us the setup and what are some of the cues that you are picking up as we go into trade?
Yeah, so there are two data points. Every day the NSE releases what is known as the participant data, which are four different segments that trade the futures market, which is divided into client, FII, DII, and Pro. Now, some of the largest positions are held by the client and FII, and many times the client and FII are on opposite sides of this trade. Now, client doesn't always mean retail investors, because futures market is traded by a lot of big traders. So I would say that it includes HNIs, it includes the larger traders in the market who have directional bets. And what we really see historically is that every time there's an extreme position on one side or the other, which means if there's a very large short by FIs and then there's a large long by the client side, then that sort of indicates the possibility that the markets will move higher from there, and not just for a day or two, but for several weeks. So we have to put this thing into a slightly bigger perspective, bigger slate, because this is what we saw in the last 2 days post expiry, is that on the first day of this new settlement, FIIs in the index futures segment had the highest short position since October, November of 2023. That is when the Nifty was closer to around 18,900, 800, from where it actually rallied to 22,000. So it took, for the entire short covering to happen, it went from 18,800 to 21,100. So that just to give you perspective of, what happens in terms of size of move and time duration. Also, it took more than a month for that to happen. So you have to give it some kind of 2 months. On Friday, we noticed that those shorts got increased further. So the number of contracts, short were around 3,18,367. Like I said, highest since October, probably the second highest in 2-3 years. On the client side, the reverse is true. It was the second highest long position. So this is the smart money, which was probably betting on, a win by the BJP, which is why it had the second highest long position at 313,900 contracts on Friday's closing. Okay, so this again was the highest since March, which is when you probably made the all-time high reading, or probably even prior to that is the all-time high reading. So this is pretty high. Like I said, it's the second highest long position, big bet that the party would actually come back to power. But the market was still falling last week. It was slightly jittery because of global cues. So that was the setup at the end of the week. What we started to sense, therefore, is that this kind of a setup is usually indicative of a multi-week or 1 or 2 month kind of upward trend in the market. Only thing we needed to really discount is what happens around the election result dates itself post the exit polls, and that we are seeing is now looking very, very different from the last two occasions. The last two times election results actually happened, FIs were actually long. Though they had cut back some of their longs ahead of the results, they were still maintaining long side. And then markets actually preempted and rallied ahead of the results. So on the result day itself, we saw big intraday swings, but nothing much in terms of intraday, end of day gains, because most of the gains were done before the results. Now, probably by falling last week, we have created a setup where, markets actually are heading, so much higher than they did the last two times. So it's very, very different. The setup is different. The positioning is different. And the only thing is that what I'm saying is that while this can be a multi-week move, tomorrow, because we are starting to discount the gains likely to be made by the BJP today itself, it's possible that tomorrow does end up being flattish. That's just my thought, because then you would have already priced in the 360 seats odd, which on average are being considered ahead of the results itself.
Fair enough. So you said that, when you have such large short positions from the FIIs, then it takes a long time to cover, and, that for a length of time, the market will continue to go up. That is what happened, you said, in October. Now, is there a way to figure out at this point in time, how long could this sort of buoyancy continue, considering the kind of positions we have?
So I've put an approximation of around 2 months. I think that is the sense, just by looking at the previous cycles. That doesn't mean it cannot last longer also, but that's like it gives us a starting point in terms of where to go. We should all, and so we also start considering how far up can we really go. We can come up with different numbers now that we are opening above 23,000. We'll start considering, the next levels, which will be well above 20, maybe closer to 24,300 or 400, with the downside being at the recent low, right, which is around 22,400 being the low, just in case there is any further volatility tomorrow, if the numbers are not exactly in line with what we are getting in the exit poll. Those are the short-term things to think about. But overall, I think it does end up adding up significant. I mean, we just made a comparison with October, right, from 18,800 to 21,100 is almost adding up almost to 2,000 points plus. So if I do that here, you go well over 24,000, maybe even get closer to 25,000 overall, but in a period of time. So we have to give it that much time for it to happen. It's not going to happen, in a matter of days.
So Rohit, I'm asking this in the context of the fact that this is a very unique position, in the sense that this setup is to do with one event, right? I mean, it is not a general setup that is based on multiple market variables. It is for a specific day. Considering that, once the outcome plays out, is it possible to guess if it could happen at a shorter time with a larger hike playing out, or it will take that kind of time for this to get resolved?
So I think that answer is easier given, only after a day or two. Historically, we haven't seen short covering complete like within a day. But what is true is, because of the event since, I think, 9th of April, we have seen FII positions gyrate from long to short in very, very short periods of time. I mean, if I just go back a couple of weeks, 15th of May, they were actually long by 283,000 contracts. And by the end of the month, they were short. And then prior to that, again, they were on the other side, on 2nd of May, they were also short. So this kind of gyration where they are going, from extreme short back to long, back to short, is not what we have, usually seen. But of course, this has been because of the event. So that part, you're right. So can we really see this cover faster? See what will happen, say if they do cover. Say if we look at, the data tonight, the market's up, 2, 3, 4%. And suddenly you find that their entire short position is gone, then we'll have a very, very different situation on our hands, which means now what? because the trade setup has changed. You don't have a short position anymore. So definitely that can slow down the pace of the advance. But in the meantime, we would have improved the technicals of the market. So this is where we're focusing a lot on positioning, but we have to look at the technicals. The market has essentially been in a long consolidation from January all the way to May, where it has not been able to get out of this range. Although it has been a rising range, we've made higher lows, but we've really not seen big rallies. We've seen like 500, 800 points. It goes up, then it gives up, then it goes up again. Somewhere we are going to be attempting to break out of this range. I think that is the bigger thing. And like I said, even after last week's selling, we held the 20-day average, which is a very good point, and then we are making a higher high today. That is technically a very strong signal of a continued move, even if there is short covering in a day. But that doesn't mean short cover. I mean, we'll have to see. Can short covering mean you'll go from extreme short to extreme long within a day? It has never happened. So, which is why I'll not anticipate that kind of thing. Yeah.
Okay, so the other data point I was looking at, Rohit, is the overall individual stock futures position, where you see that there you don't see a lot of shorts. In fact, there is a healthy long on that side. So how do you read into this from a overall market perspective? Is it that this is the way FIIs are positioning is to take tactical bets on individual stocks that might rally because of this, election win rally? Or is there, how would you read into that?
Yeah, so when we study long short positioning in index futures, we should consider the idea that a lot of it might be hedging, right? They are not always directional bets. And the position we are also looking at is a net number. So when we study this data point, we are really trying to study sentiment. We are trying to gauge that there are hundreds of FIs, and as a group, net of all their long and short positions, what is left on the table is what we really look at, and that tells us whether net are they feeling more optimistic about the market, or are they feeling more pessimistic. So it is not the gross position that is short. There are huge long positions by certain groups. There are huge short positions. It's the net of the both that we are saying is short. So that is essentially an indicator of sentiment more than anything else. And the theory is that if sentiment really reaches a negative extreme, then you're going to see things improve from there, because likely everybody turned fearful at that point of time. So that is how we read into this data. So like I said, a lot of it may be hedging because they have existing portfolios. There are guidelines by SEBI in terms of how much you can really trade. They require underlying stock, especially in index futures. If your position is more than 500 crores, then you have to put up further cash and stock against that position. So there are a lot of things that make sure that it's not a directional bet against the market. But what it does tell us is what are they really thinking. If they're hedging also, it tells us that, okay, they are hedging so much that, they become fearful enough where the markets are probably closer to a bottom. So that is how we read into it. The stock futures positioning does clearly show that, broadly, there are areas where they are bullish, like you said, and they are investors, like they have a large portfolio overall allocated to India. And versus that, they have certain, index positions which are hedging it.
Sure. And where do you see momentum building? I mean, today, of course, index is one thing, but outside of the index, what are your charts showing, and what is the derivatives position in individual stocks showing in terms of where we could see a lot of buoyancy?
So I think there is a case for some level of sector rotation to happen. For example, we have seen meaningful strength in the bank Nifty this time around. Most people may not have noticed, but while Nifty closed down last week, Bank Nifty actually had 3 consecutive positive weeks, of closing. And in that sense, what I'm trying to say here is that the banking stocks, and here I'm not referring to the PSUs, the banking stocks, the private sector names, etc., are actually showing relative strength within all this volatility by actually falling less and holding out better. So I think you're going to see new sectors start to perform, as this, new government gets reinstated, and that we are able to see in this rotation. So I think banking is one of them, which I think makes a comeback. The IT sector could be another one, because IT sectors have been the most beaten down. There's been a lot of negative news flow. But if you look at global markets, which have already started to pick up and hold higher, You have the US tech market, starting to do much better. Eventually, that percolates down to, Indian IT stocks as well. And so I think they're probably well poised for performance. Now, I can't say whether they outperform better than other indices because they often have lagged, at least when the large cap IT is concerned. But the big gains have often come from the mid cap IT. So I think it's probably time to focus there as well. So this is where I'm saying sector rotation. Because imagine once the BJP win is in, are we going to still continue to excessively bet on PSU stocks? Now some of the PSUs start looking like, okay, they're very overbought. The RSIs have reached like 90 plus on even monthly charts. So that gives us reason to believe that, okay, this sector needs to cool off a bit if it needs to keep running. Now, that doesn't end the long-term trend, but it simply means that shorter term, if they do consolidate for a while, it would really help, the overall health of the sector itself. So, be prepared for some type of rotation where, sectors that were holding up the market over the last 3 months cool off, and others which have actually been lagging behind and actually showing strength coming back, which can also include FMCG, for example. FMCG stocks were underperformers over the last quarter, but over the last month, they have actually shown strength coming back. So I'm looking for this rotation, between different sectors to actually lead the way up in markets, both in large caps. In fact, large caps could also be the play relative to mid caps. So you could actually see a lot of gains in large caps relative to mid caps.
Hello, can you hear me?
So, what is your prognosis for this week, and more importantly, today? How is the setup looking?
Yeah, so when you have a big index move for the day, then it is going to be a lot more large cap than mid cap. So that means you end up looking at stocks within the index itself or within the FNO, like you said, FNO basket. But FNO again is not all index. So within an index, if I look at large caps, they'll have to be individual names. And could be from varied sectors. For the time being, it's possible PSU still get the fire because that is what it has all been about. The entire theme of the last 2 quarters has been there. So that will probably still see fire today. And the rotation which I'm talking about might only happen over several weeks. But I do think banking, even last week, in the correction Friday, banking was actually up. So I do think banking would be one segment which could lead in today's move. So that's probably what I would really focus on.
And within banking, anything specific? I mean, would you bet on the, HDFC and Kotak, essentially the beaten down banks, or would you go with PSU banks?
So I would go with the private banks. That is what I'm trying to focus on, and probably the entire basket.
So this week, are you saying this week, from a trade perspective, this week private sector banks will outdo public sector banks?
Yes, I do think so. I think on a 1 week basis, that is what is likely to happen. You will see a lot of the private sector banks really gain traction.
Okay. And the other question I wanted to ask is, from first hour of trade today, will there be some takeaway? Because logically, anything that gains today in the first hour should set the tone for the rest of the week if the results tomorrow are pretty much in line with the exit poll results. Will that be fair to say, or you would differ?
Yeah, so see, this is where for very short-term traders, where you have only a 1 or 2 day time frame, there is a huge risk to come in and buy at the gap. Either you anticipated at last week's pullback that, okay, we are done because we were at the 20-day average. Bank Nifty had retraced 61% by Thursday itself. So those were good levels at which one could anticipate. Now, when you open 3 to 4% up, should you really go in and buy over here? My answer would be actually a no. Because when you open that much higher, a lot of people are going to be booking profits. Imagine the people who've been betting on this for months that, the BJP government is coming to power. Somewhere they're going to be taking some profits. So there's that likelihood of profit booking coming in, whether it starts today to some extent and further tomorrow. Because say today you'll have discounted that, okay, we are getting 360 numbers, we moved up by 3, 4, 5%. Tomorrow actual numbers come in at the same. You cannot redo the same thing all over again, right? So somewhere then it gives up 1 or 2% from there. So you have to be prepared to wait for that to happen. Watch it. I would give it 3 to 4 days, in fact. So because you're getting this gap up, the trade to simply buy the gap does not exist. the chances are that you'll get sold into, and then therefore on a 1 to 2 day basis, the trade could end up being on the downside, and very, very different from what we expect over time. But there is some history to
Okay.
it.
So over the course of this,
Sorry.
no, so over the course of this week, despite the election win, do you think there will be weakness in Modi stocks, or that should be the pasture we should actually take more seriously and bet on?
Yeah, because of the gap up and because you end up discounting, the results themselves, there is a possibility that, post tomorrow, you do see some selling pressure build in. We have seen that happen in both the previous elections. So that is what I was coming to. The history is a guide over here. Even in 2014, day of the elections, market had 7% moves intraday, gave up most of the gains, but then in the next 4 to 5 days, it did not come out of that range. It stayed within that range. And only much later did we actually see a further pickup in the market. 2019, it was even more stark because the intraday gains were given up and you had a negative closing in 2019. And that's despite getting more seats in 2019 compared to 2014. So the market had already anticipated that and rallied ahead of the event. On the event day, it gave up the gains, and then next 4 to 5 days, there were no gains. So that's why I'm taking history as a guide, that if you end up anticipating that, okay, this is the big win, and you end up moving higher today, then tomorrow you're really not going to get that.
Right. So on charts, Rohit, give me 3 to 5 charts that are looking really strong today.
So I have mentioned banking
for today and for this week.
So I will need to mention, I'm not an investment advisor. Okay, so we really are not allowed to give recommendations. But I'll highlight, like I said, private banks. So they're all stocks. They're all well known. You mentioned HDFC, earlier. They could also be the leaders, which is ICICI Bank and Axis, have actually done much better during this phase also against HDFC, which is among the private banks. So the better performers within the private bank, being Axis Bank and ICICI, would probably be better ones. So that is what I would think of in terms of those names. I would have thought Reliance, but it has a pretty peculiar chart because it closed down for the week. I am not sure whether that will be a contributor this week to these gains in a big way. But I also thought that somewhere IT needs to pick up. So I would look at within the large cap names again, Infosys or Wipro or TCS. So these are the big sectoral names where I would look for a pickup.
So what do you mean a peculiar chart? You refer to Reliance having a peculiar chart. What does that mean?
Peculiar means that when it rallied last week, it actually hit the trend line of the last two highs around 29.80, and it was not able to get past that. Now, having done that, it is also broken, its averages on the daily chart. So what that does, it opens up some risks that it could go down to maybe 27.40 or so before it can actually resume its upward trend. So that is just my thought on Reliance standalone, that it has that setup. So which is why I'm not sure whether it can immediately make big moves. It still needs to consolidate a little longer within this range before it can really join in. And that's why I said it's peculiar.
Fair enough. How about the Adani pack? Because that has been a high performer, at least in the last few sessions.
Yes, so they definitely have positive momentum. The Adani stocks, if I look at them, even if I look at, say, Adani Enterprises, if it's most likely going to open above the high that we saw on the 24th of May, which is around 3457, it's indicative of a larger, trend higher continuing. And so far, we've actually gone past. I mean, imagine there was that big sell-off in Adani Enterprises when all the Heidenberg reports came out. Most of those losses are now regained. Almost 80% of those losses are now regained. So it looks like we are slowly heading back to the highs. So we do have the momentum for the Adani group to continue.
Fair enough. So what is your bet on, where will we open today? Where will we close today?
I think we are already seeing something close to 23,000 plus as the open. I won't be surprised if we just end up closing near abouts of 23,000 only and not really continue to run away higher because the market would have discounted the exit polls and then start waiting for the actual numbers to come in. So I don't think there'll be additional runaway buying at higher levels because most people would want to wait for the actual numbers. And that's why I think, after the gap up, there may not be significant intraday gains. And even if there are, it's possible that those intraday gains are sold into, and then you get more of a flattish opening, flattish closing compared to the opening. Or even it's possible you open slightly higher and you close slightly lower, even though you may still be up to 3% compared to where we were on Friday. We might not hold on to 4-5% type of gains end of the day.
Okay. Thank you so much, Rohit. Such a pleasure talking to you this morning. We move on to our next show with Nandita Khemka on opening bell.
Well, thanks, ML, for that. But before you go away, ML, I want to ask you, you've had chats with a battery of market experts, right since Saturday evening. And now that we have seen that the NDA is expected to come back with an even bigger mandate than 2019, do you think, ab ki baar 24,000 par also looks like a possibility this week itself? What are experts telling you?
Oh, absolutely. I think the sentiment is very, very positive. And today, the fact that we on the GIFT Nifty, we are already up 700 points gives us a very good chance that this week you could test new highs from there on. But you have to still wait and watch because like Rohit was saying, the guest we spoke to just now was saying that there are a lot of shorts from the FII side, and it is not necessary that all of it will sort of, this will take about a month or two to get unwound, and there will be continued buoyancy beyond. But who knows, today if we are up about 3%, 4%, tomorrow again, if the results are in line and the magnitude of the win is high, it's very possible for the next 3-4 days, markets will continue to be buoyant because in general, there is nothing to pull down the market so much, except that everybody who is already leveraged and positioned on the buy side may actually want to take some profits. So that's the only technical parameter that will work out. Otherwise, there is nothing to drag the market down. So very possible.
Right, very possible. And 800-point uptick on the GIFT Nifty. We just have somewhere around 8 minutes to go for market open. Let's see whether we hit that 23,500 mark in today's session itself. But on that note, as I mentioned, 8 minutes to go for the market open. Let's take a look at the top headlines then before we get in our next set of guests and decode the setup for today. So in terms of what happened, with the exit poll outcome, all major exit polls project a resounding victory for the BJP-led NDA in the 2024 Lok Sabha elections. The BJP itself is expected to better its 2019 tally of 303 seats. In fact, together with allies, it may even come close to that, ab ki bar 400 par kind of dream mark that, the NDA or BJP has indicated or is hopeful of winning. D Street, of course, is ready for a bull party. GIFT Nifty hinting at an 800-point up move. We'll have to see whether we manage to open with that kind of gap up or not. On the economic front, good news as well. India's GDP figures, have topped at 8% mark for FY24, higher than expected. Gross value added growth, which excludes subsidies and taxes, came in at 7.2%, with manufacturing sector growth touching 10%. On the global front, good news there as well. The Dow clocked a 570-point rally on Friday, clocking its best day for 2024. In fact, if you look at the Fed's preferred inflation gauge, PCE, the personal consumption expenditure index, that rose in line with expectations at 0.2% on a month-on-month basis, and it's a sea of green across Asian markets as well. So confluence of factors could lead to a gap up open on the Lal Street. Lastly, crude prices, of course, clocked their worst month. With Brent falling over 7% in the month of May. The OPEC Plus has decided to extend its production cuts into 2025 in a meeting over the weekend, but some rollbacks could be expected in October. So all those headlines we are working with this morning before market open. Confluence of factors, good news on the political front, policy continuity. You have your GDP figures topping expectations, 8%. That's what FY24 GDP growth looks like, and we have global cues also supporting us this morning. So yes, an 800-point gap up. Let's see whether or not we manage to clock that in as the bulls get ready for a party. Given the fact that exit polls are hinting at a resounding or landslide win for the BJP. In terms of cues for trade, Friday, marked the end of a 5-day losing streak. The Nifty managed to end with mild gains. Of course, some bold traders and investors took bets in the last half an hour of trade, and that's why we ended above that 22,530 mark. India VIX did cool off a bit during the session on Friday, but it still managed to end above that 24 level. So it was up somewhere around 2% or thereabouts on Friday. A lot of volatility expected today as well as traders get ready for the June 4 verdict. Remember, exit polls are only indicative of a landslide win by the BJP, but actual results come out tomorrow, and of course traders will be looking to profit from the up move that could come in after the exit poll outcome. In terms of options cues for the June series, Nifty open interest is up 8.2%, added somewhere around 11.2 lakh shares. You have Nifty June futures trading at a premium of 170 points, and the Nifty Bank open interest was down 7.3%, shed somewhere around 1.8 lakh shares. In terms of put call ratio, the Nifty PCR stood at 1 versus 1.11 in the previous session, and there are no stocks in the F&O band today. So that's also something that traders will take note of. In terms of fund flows, remember FIIs are sitting at huge short positions, which is why a short covering rally is also expected in today's session. Both FIIs and DIIs were buyers in Friday's session in the cash market. So all in all, things are looking extremely positive. Let's then get going our battery of guests that's lined up on the show, starting with Kush Bohra, founder of kushbohra.com. Well, Kush, I couldn't have got you on a better day to talk about the market technicals. Trinity of good news, right? Exit poll outcome, no negative surprises there. In fact, there's a positive surprise. There were, hiccups over voter turnout, and, which is why we saw, markets turning very volatile. We saw bouts of profit taking and weakness as well. But all that has been put to rest according to the exit poll outcome. GDP figures are good. Global, cues are good. GIFT Nifty 800-point gap up. So what is the level really you'll be watching out for today on the Nifty and Nifty Bank as well? Do you think 50,000 on Nifty Bank is a possibility today itself?
Hi Nandita, first up a very good morning, a pleasure to be here. But truth be told, will levels really matter on a day like today? Well, that's the big question. But look at it this way. If it wasn't for this enthusiasm and this exuberance, if you did get an 800-point gap up on the Nifty and let's say about a 2,000-point gap up on the Bank Nifty, what would you ideally do? So I will for now take out the emotion from this and say that whatever profit you are getting, take it off partially off the table. See, let's not forget that the actual result is coming out tomorrow. There could be some profit booking that might come in today, and then there might be some room left for an upside tomorrow as well. So you don't want to exit too early, but then at the same time you don't want to miss out on the bumper opening that the markets are seeing if you are on the long side. So I would suggest, not maybe on the right at the open, but once the market opens, initially let them settle, but take some money off the table and leave the rest for tomorrow. The market could see a further upside, perhaps a 23,800 on the Nifty, and a 51,500 on the Bank Nifty. So I will still be in this market from a long position perspective, but I will still take some money off the table today.
Right. Kush, what would you really be watching out for in terms of stocks and sectors in today's session? PSU stocks, do you think there is a lot more steam left now that, exit polls have indicated that the government is coming back with a big majority? So PSU stocks in focus for today's session, and within the PSU basket, which one would you bet on for today? Because, remember, traders have to position themselves for the D-Day, which is tomorrow, right? Because that's when the final verdict will really come out. So for those who are looking to profit on, the next 2 days of moves, how should they position themselves in these particular sectors like defense, railways and PSU banks as well?
Well, this will be a more of the same kind of a situation, and PSU banks for sure, and in fact, the whole PSU lot, in fact, will be in focus. Now, as far as stocks are concerned, SBI is very beautifully placed, and I'll tell you why. The banking stocks are now starting to pick up, correct? Plus, there is also the PSU push that this bank will have. It was on the verge of breakout where 835, 840 was a resistance. Now, I think, all of that will be put to rest. 860 was a near-term target. The gap up, opening is suggesting that will perhaps open at that level. I think if it does sustain, then 890, 895 will also come into play. So SBI for sure is a play that you'd want to have, even for the election result day tomorrow, and maybe a little beyond as well. So 845, 830. These are the support zones. So now these should act as your stop losses. BHEL was, resisting that 300 mark. If you see, there is this gap up opening that we are seeing. 320 is the level where we are opening. Our initial targets were 306 and 312. But if this stock does give you a pullback, close to those 305 levels, you should re-enter for higher levels of, 335. These are the two stocks. But apart from that also, I'm glad that you asked that, what, for the next 2 days and perhaps a little beyond as well. So we've got a Jyoti CNC. This stock has been doing its own thing, agnostic of what the market was doing, profit booking, uptrend. This stock was touching upper circuits for the last couple of sessions anyway. Jyoti CNC is on our radar. 1050, 1090 are the targets. 950 is where you should place your stop loss. So you need to start making portfolio beyond for the times beyond the 4th and the 5th of June as well. So any pullback that you get should be utilized for that.
Okay, Kush, the markets have opened up as we speak. It's a 745 bump up on the Nifty. 23,260 is where it's at. The Sensex up 2,100 points. 76,000, that's the level we are looking at on the Sensex. Mid and small caps, of course, the mid cap index is up 3.5%. Experts were saying that the up move on the mid cap index and the small cap index would be more pronounced than the benchmarks, and that's exactly what has happened. 2.5% uptick on the Nifty. And 3.5% uptick on the mid cap index. But I want to bring your focus to the Nifty Bank Index. It has hit that 50,000 mark for the first time ever. 50,300 is where the Nifty Bank Index is at right now. 1,400 point uptick on the Nifty Bank. Sectorally, I think we should pull up all the PSU counters and see how they are performing. The Nifty PSU Bank should come up on your screen. Firstly, I want to see how some of these PSU names like defense, railways, manufacturing, how are these doing, because we are also reacting to strong economic growth, mind you, not just the exit poll outcome. SBI up 5%. You have other PSU names like Power Grid, NTPC, BPCL, all of them up in excess of 5% as we speak. L&T is another one that's seen a 5% bump up. ONGC, Axis Bank, M&M, Coal India, Ultratech Cement, ICICI Bank. So all around cheer. There are no losers on the Nifty today. All of these stocks, all of the Nifty 50 stocks are clocking in gains in early trade. Look at some of the other pockets that are and see how they are doing right now. Let's take a look at some of the BSE sectors. The auto pack is up 2.5%. You have Bankex, as I mentioned, up 3.5%. Capital goods index is up 4%. Remember, manufacturing, component in the GDP figures have hit a double digit growth. 10% uptick we saw in the manufacturing index as well. So capital goods up 4.5%. We have metals up 2.5%. So all round cheer. The oil and gas index is also up 4.5% or thereabouts. In terms of the most active shares on NSE right now, HDFC Bank, SBI, Adani group of shares like Adani Ports and Adani Enterprises, as well as ICICI Bank. So top or active shares on NSE are from the banking pack and the Adani group of shares. Adani Ports, by the way, is up somewhere around 8%. Remember, in Friday's session, we saw good traction coming in on the Adani group of shares as well. Kush, looking at the open, do you think we will manage to sustain this kind of up move towards the end of the session, or do you think second half is where you could see some traders taking some bit of profits as well?
So I fall in the latter camp where, as I said in the opening remarks, that, this is a good opening. This is a very solid opening. maybe a little beyond what most of us would have expected. We would have expected somewhere close to the all-time high levels of 23, perhaps a little under. We've opened far beyond that. Even on the bank Nifty, you're seeing that it's just been 3 minutes, but you're seeing some money being taken off the table. I think that will be the theme, because I think the markets would want to now position themselves for the results tomorrow. So I do believe that some money will be taken off the table. Volatility will continue to remain high. So if you do have a long position, then partly exit. Perhaps if the market does correct by a significant margin towards the end of the day, you could consider going long as a BTSC. But for now, take some money off the table.
All right, take some money off the table. But what would you do with the Reliance Industries today? It's up somewhere around 2% or thereabouts. Do you think one should play Reliance Industries as one of the stocks in their portfolio for the rest of the week?
Well, Reliance is one stock that we've been constantly, advocating to, buy on all kind of tick lines. This stock's got a tendency off late of, rising, all of a sudden, and then perhaps going into a bit of a lull consolidation and perhaps even correcting by a brief margin where, the confidence is shaken. But if you see the larger trend, the stock is still in an uptrend. There is this consolidation that is happening, at the 3,000 mark, which is also that psychologically important mark. But other than that, any kind of tip that you get should be taken as a buying opportunity from a medium to a long-term perspective for sure. So Reliance is a buy on decline for us for given the current setup at least.
Right. Kush, what would you do with auto stocks? We had auto sales figures coming in over the weekend, although they were a mixed bag and, there's been some slowdown given the fact that we've seen a heat wave, we've seen elections at play. So, all those things have dampened auto sales for the month of May. But, of course, in tandem with the rest of the markets, we've seen a good up move in the likes of Maruti and some other auto stocks. So, would you take positions there?
Well, I am constructive on the auto pack, but I think the kind of moves that we are seeing today warrants a round of profit booking. See, Maruti was, short. There were short positions built on Maruti, and what we are seeing is a combination of, short or rather, mostly short covering, and hence the jump up on this isn't really as big as some of the other names. I think, if you have a long position, you might want to perhaps, exit at cost, or maybe if there's a marginal profit, then take it off the table. Most of these stocks, the likes of M&M, it's close to the resistance mark. Maruti hasn't really gained as much as some of the other names. Tata Motors is also seeing some sort of pressure. So while we are constructive on these names from a medium-term perspective, I think from a near-term perspective, it's a good idea to book profit and sit on the sidelines. I think these stocks will see lower levels from where you can re-enter.
Right, Kush, before I get on board my next guest, Kush, I want to get in your thoughts on the Adani group of stocks. Adani Ports has seen another 7% up move today. Within the Adani pack, would you bet on an Adani Ports, or would you look at some other counters like Adani Total, Adani Enterprises? Which one would feature on your list now?
Well, just as a disclaimer, on Friday, Adani Ports was something that we had initiated a call on. So that's our take on the Adani group of stocks. We were constructive on the entire pack. Glad that the market is rewarding that. As far as the stocks go, I will have three picks from the Adani stable. First is obviously Adani Ports. Correct. This stock has been one of the rank out performers in the pack. Second is Adani Enterprises. This stock has has had its share of volatility, but with the entry in the index, I think there will be some more buying that will creep in. So any kind of dips that you get on Adani Enterprises should from here on be utilized as a buying opportunity. And the third one, that you can look at is Ambuja Cements. Right, this stock has been on a tearaway rally, or had been on a tearaway for a rally for a while, but has gone into consolidation. I think with the kind of infrastructure push that we are seeing, this stock will continue its uptrend. So three stocks from the pack: Adani Ports, Adani Enterprises, and Ambuja Cements.
All right, those are the stocks to watch out for from the Adani group of stocks. Hold that thought, Kush. We'll come back and discuss more stocks in greater details. But let me also bring on board market expert Ambareesh Baliga with his thoughts on how to navigate, the up move in the market, and which are the sectors and themes that would work over the next couple of months. Great to have you on the show, Mr. Baliga. Looking at the screen right now, I'm sure you will be a happy man, and all the other market participants will also be happy. We've seen a good 600-point up move at life highs. But Indian markets have matured, so to say, because we've seen a lot of this rally being driven by retail investors.
Right.
Foreign investors have been sellers and sitting on huge shorts, right? But would you say today is the day that marks the return of FIIs in the Indian markets?
No, I think we'll have to, in fact, wait and watch whether FIs come back or not. Because today's move, I mean, although it's clearly election linked, but then technically it is more of short covering, because there was huge amount of shorts which were built up over the last couple of weeks in the run up to the election results. And with the numbers which we have got with exit polls, and in case similar numbers or better numbers come tomorrow, I mean, a lot of these short positions have to be covered up. I think it's already covered up to a certain extent today in the morning, because of which we have seen this huge gap up opening. But then, I think over the next few days, we need to see whether this sort of upside, in fact, continues, or whether we consolidate at these levels, or whether there's a correction. But then, with the huge gap up, I mean, I would say that a few of the investors would surely utilize this to book profits to a certain extent. And that's what, I would recommend. Because, I don't think there was a question whether NDA would come back or not. I mean, all through, the last couple of weeks, I don't think there was a question whether NDA would come back or not. I think the question was more of what sort of a majority they would get. And in the last 2 weeks, there was a fear that it could be closer to about 310, 320, with BJP closer to about 272 plus, and because of which we had seen some amount of jitteriness or some amount of correction from those higher levels. But then, with the sort of numbers which have come out in the exit polls, that has added to today's euphoria. Question is, in the short to medium term, whether we can sustain at these levels. I would probably say, utilize this huge move to book some profits.
Mr. Baliga, are the markets pricing in, a tally above 400 for the NDA, or do you think that's still not been priced in? And because of that, if that happens tomorrow, do you see chances of 24,000 on the Nifty, in the next couple of weeks, so to say?
No, why next couple of weeks? If it is 400 plus, then I suppose we could see 24,000 maybe tomorrow itself, for all you know. But then, these are periods of that euphoria, because today, what are you doing? You're trying to discount 2047, because that's the sort of a storyline which is being doled out right now. But then between now and 2047, there'll be decent amount of correction. I'm not saying that the markets will not perform. India, I think this is a decade, or maybe the next 2 decades are for India, and we are bound to perform, no doubt. But then, market is like a pendulum. There are those times when you'll see corrections, and those corrections also can be very sharp corrections, because today, if you look at valuation perspective, I think we are quite expensive. Sentiment wise, it's extremely good, no doubt, because of which the liquidity is coming in and the markets are going up. But somewhere the fundamentals need to play out, because although all of us are bullish, but then this gap between the fundamentals and the market has been increasing, and today with this sort of a move, it has increased more. So I would possibly utilize this to book out to a certain extent, utilize this euphoric move, and then wait for a decent correction to again get in. But at no point of time am I selling. Am I telling that one should be selling your complete portfolio and exiting? No, not at all. This is a market to be invested in, but utilize these moves to get that bit of alpha in your portfolio.
So do you think it's time to rotate out of these Modi stocks, as CLSA put it, the defense names, the railway names, and perhaps move into the underperforming lot like banks, so to say? Do you think now is the time to do that?
I would say the next few days would be the time to do that because like in the last 2 years, what has happened for the PSUs and the defense and railways names? People had ignored these stocks for ages. Even the IPOs of some of these defense stocks were not even getting subscribed properly. And from that complete ignoring of that lot to rediscovery, whenever this happens for any stock or sector, you see that the sector performs multiple times. You have so many multi-baggers coming out of the sector, and exactly that is what has happened in defense. But then, if you look at it fundamentally, yes, order flows have been extremely good, much better than what was expected, and because of which we have seen this move. But the next question is, as to how will they execute these orders? Because quite a few of them have got orders for the next 8-10 years. Of current revenue. Is it possible for them to expand so fast so that the deliveries are faster and then they can take fresh orders? Do we think that they will get orders for the next 15 years now? I think that's a bit far-fetched. And at the same time, I don't think anyone is really talking of execution risks because there are a number of times we have seen, even in the past, that there have been execution issues. So no one is really talking about that. And as and when that happens, I suppose you'll see a decent correction in some of those stocks. But now, at this point of time, I would say yes, it is time to book to a certain extent and possibly lock into the sectors which really haven't performed too well and expected to perform better. For example, IT. We have not seen IT performing in the last couple of years. But now going ahead, clearly it is expected that possibly from Q2 or Q3, we'll start seeing a decent uptick as far as IT performance is concerned. So possibly it's time to book out from defense and railways to a certain extent, get into IT, get into specialty chemicals, which again, we were expecting some decent performance last year. That's not happened. But even now, we are seeing that the margins are improving. The top line really hasn't started moving up. That should start moving up this year.
Right, if one were to ask you for fresh ideas, everything else, you mentioned IT, specialty chemicals, so would these be the pockets now? Because everything else has seen such a staggering up move any which ways, right? But aren't you concerned about IT that, if you go by what Salesforce has done, it has got its guidance, that still gives rise to concerns on whether or not IT could see a recovery in the second or third quarter, or not unless discretionary spends pick up, right? So would you still say that it's time to go out and buy IT?
Yeah, I would still say that this is the time to possibly get into IT. You may have to wait. This is not a sector which will start moving up from tomorrow. I think there is a waiting period for this. But then clearly, I think we should see those green shoots as far as IT is concerned, like I said, possibly in the next 1 or 2 quarters, because if you look at the management commentary, quite a few management commentaries are still very cautious. But then, you just go back and check out as to where defense and railways were. About 3 or 4 years back, no one was really talking about it. That's similarly the situation with IT today. And tell me, can the world do without India IT? Most of the world is running on Indian IT.
Want to get in your thoughts on the Adani group of stocks. All of them are clocking in very handsome gains in today's session. Would Adani group of stocks feature on your buy list now?
Not really, and not at this point of time. I think it's more of a trader's delight. And if you ask me as to which group or which stocks are the major beneficiaries of NDA coming back with a thumping majority, surely you have those railways and defense, no doubt, which have anyway moved up. But then, as a group, Adani Group would be the biggest beneficiary.
Going beyond elections, if you talk about earnings, the corporate earnings, what is the trajectory looking like after the fourth quarter earnings? Would you expect double-digit earnings growth in FY25?
Not really. I think the trajectory will be similar, at least for the next 1 year. And again, looking at the sort of a growth, it's more or less, it was a mixed bag. And as compared to that, if you look at the way the markets have moved, I think it's just gone a bit beyond. And again, I mean, this is we should remember that this is the third term of the Modi government. And normally, I mean, a new government, whenever it's formed, like normally in the first 1 year, they try to take some tough decisions. And that's what is going to happen this year. And I mean, if you're talking about the budget, we could see some sort of tough decisions happening in the budget too, which again may not be too market friendly. Because, I mean, we've seen that this government has been very market friendly, but it may not be in the first year. It could be much later.
In terms of sectors that may benefit from the government's, reforms once it's formed, which according to you would be the major beneficiary this time around?
See, I think, I mean, infra is there to stay. So infra sector would be the one which will benefit decently well even going ahead. So anything linked to infra ancillaries. I mean, again, when I talk of infra ancillaries, I'm talking of cement and steel to a certain extent, but more of cement because that has more of a local I mean, flavor than steel, which is like driven by a global demand supply. I mean, if you're talking of railways and defense, yes, I think that will continue, but I don't think the stocks will really perform the way they have in the past because of the sort of concerns which I spoke about a bit earlier. Then I think the auto space, FMCG, consumer durables, I think these should perform well. It's just not because of the government being formed, but I would say it's more to do with monsoons. Which are expected to be, normal or better than normal. So I think all these sectors will start, doing well, possibly in the next month and a half, 2 months. I mean, like basically I'm talking about FMCG and white goods because we've seen auto performing even in the past, and that will continue, especially two-wheelers and passenger cars.
A couple of more questions, Mr. Baliga. If somebody wanted to, ride this election-led pop, of course, you've mentioned that, maybe after the dust settles, we may see some, profit-booking-led correction, right? But if somebody is looking to play these two sessions, today and tomorrow, any advice as to which sectors they should position themselves in? Anything that you would like to, advise our viewers?
See, if you're just playing short-term, if you're a very short-term trader, then what better than Adani Group and defense and railways? I think these are the ones which will be performing the next few days.
All right. And, would you concur with the fact that, perhaps a couple of weeks into, post-election results, that is when, the correction that you've been talking about would set in? Or do you think the rally would have some more legs, perhaps till the budget, when, markets will assess all the announcements that the finance minister would make, and perhaps then you could see some bit of correction coming in. But from now until budget, do you think the, markets could see big moves?
No, see, if the numbers tomorrow are more or less in line with what we have seen in the exit polls, I think we could have a few more legs of the rally. But the next few legs may not be as big as what we have seen today. We could see the market sustaining, possibly going up some more from here. Based on the actual election results. But in case the election results are lower than what was expected in the exit polls, again, if you're talking of about 310, 320, even with those numbers, we can see a correction. So for the markets to move up from here, we should see 360 to 380. And in case, like we discussed earlier, in case it is 400 plus, then you can see one more bump up from here. But I see the markets possibly sustaining based on these numbers, till the budget. And that's the sort of a window which we're getting to at least book some profits.
All right, that's the view then on the market. With that, Mr. Baliga, thanks a lot for taking out time and joining in this morning. Hope to continue our conversation after the crucial election verdict as well and see where the markets really head from here. Thanks a lot for taking out time and joining in this morning. Well, with that, let's go back to Kush, who's been waiting by. Kush, want to get in your thoughts on a Suzlon. We have a query coming in on our live feed from Vignesh. wants to know whether a target of 65 is possible on Suzlon or not. Trading at 50 levels at the current juncture, up 5%, but in the last 1 month, we've seen a good 20% uptick. So, would you call this stock, or would you say it's in overbought zone already, or would you say that 65 is actually a possibility before the stock starts cooling off?
Still far away from overbought territories. I think partly also because when the stock went up, there was some correction in the market, and the stock also participated in that, and so there is some cooling off that's already happened. 50 is a technical resistance level as well. Plus, I think there is an upper circuit lock, at this level. But positionally, if you ask me, I think 65 is, very likely on the stock. Plus, in fact, what will happen from here on is that some of these themes will start to gain momentum. So you could see 65 perhaps a little sooner than later. Nevertheless, if you've bought it from lower levels, not a bad idea to start, booking some profit around the 57, 58 mark, and then perhaps some more at the 65 mark. So still some distance before it gets into the overheated territory, and the trajectory is up. So you could continue to hold, but don't forget to book partially around that 57, 58 mark and hold the rest for 65.
All right. Before we move on to the next query, just want to tell our viewers we haven't forgotten you. Please keep sending in your queries. We'll try and get them addressed as long as Kush decides to stick with us. Kush, the next one is coming in on a BKG Foods from K Naga. Stock is in the negative zone despite the broad-based up move that we are seeing today. But if you look at the weekly and monthly charts, not a bad stock. The returns have been in the positive zone. Would you use this dip to buy into it?
Well, I might actually use the rises to exit, while the near-term move has been, positive, but it's been a sharp one. Before that, if you see the stock rises, and there is this sharp bout of profit booking that comes in. So for me, this stock is perhaps a wait and watch for a fresh entry. And if you've got an existing position, it's not a bad idea to take some money off the table. I think there is some supply pressures, around the 590, 585 mark. Even today, if you see the stock hit that high of 620, and then it's again back to the 590 mark, I think there will be some pressure. So not a bad idea to book profits or exit, especially if you have it from lower levels.
All right, sell on rise. That's the strategy that Kush is advocating here. But Kush, what about an HDFC Bank? In Friday's session, we saw a good up move. Even today, it's extending its gains. 2.5% uptick for an HDFC Bank right now. Jeet wants to know what he should do with this stock at the current juncture.
Continue to hold. I'm assuming that if you've got into HDFC Bank, you're perhaps a medium to a long-term investor. If you're a trader, then you might want to take some money off the table. But if you're a medium to a long-term investor, continue to hold. We've been advocating HDFC Bank for a while now, even when it was close to those 1400 odd levels. Our year-end target on this one was 1700. Glad to see that we are fairly close to that that level already. Even if that target is achieved, I think you should continue to hold on. This stock has underperformed grossly for for a while now. I think the tide is turning for this one. So continue to hold HDFC Bank if you are a medium to a long-term investor. Any kind of dip that you get towards that 1520, which is a 200-day average, if you get a dip towards that mark, go ahead and perhaps even add some more.
All right, that's the view on an HDFC Bank. Hold and of course buy on dips. That's a strategy. But the next query is coming in from Luna Day and wants to know a good entry point for Hindustan Aeronautics. We are dealing with a lot of good news at the current juncture. But when you look at the stock prices, the entry points, may not be as good, right? Because they've already seen such a staggering surge. But viewers still want to know whether there is an entry point for some of these defense names. So for particularly for HAL. Would you or do you foresee an entry point now? Because over 6 months, the stock has literally doubled.
Nandita, I am actually quite glad that, the users are and the investors are still asking for, entry points and, buy side trades on these. Because look, I'm a firm believer of the fact that, the strong keep getting stronger. If you see some of these names, they are, I think, perhaps a decadal kind of a story. We've seen a sharp run up, but, there isn't anything stopping them except for, let's say, 1 quarter of, perhaps some less than expected results, or perhaps some sort of profit booking after they hit the overheated territories. So I'm quite glad that these stocks are on the radar. If the election results do come out in line, I think there will be more of the same for these stocks. So for me, I think this is a good a space to be in. Now, as far as the entry point goes, the stocks seen an emotional gap up today that we are seeing along with the market. For me, a more rational entry point is close to those 5,000 levels, which I do believe that perhaps the stock could come to after this election hangover and the jubilation subsides. So you might want to wait. 5,050 are the levels that you want to look at. There is also the gap that is created today and will close out once the stock hits that 5050 mark. So if you haven't participated yet, perhaps wait for some more time, and these are good stocks to add on decline even now.
All right, add-on declines, that's the call on an HAL. But let's take a look at the next query. This one is coming in from Viru Paksi. He wants to know whether one should buy or sell BHEL at current levels. Your advice, Kunal? Sorry, Kush.
Well, just incidentally, in the opening comments, we mentioned that, BHEL is one stock that, we look to add. 312 was a second target. The opening was at about 320 kind of levels. Seeing some cool off from there, but it's expected. I think this stock is also in line with the PSU theme that we were discussing. Very much an add-on declines. The stock was seeing some resistance around the 300 mark, but I think that was just in anticipation of the exit polls and the election results. All in all, the broad trend for this stock is very much intact. If you have it, you might want to book it partially today and re-enter at those lower levels of perhaps 295 and 300. But on the whole, this is also a buy on dips kind of a story for us.
Okay, since we are talking about PSU stocks, I have a query on railway stocks that's come in from Yash Khandelwal, and he wants to know, are there still chances to book profit on railway stocks today and tomorrow? So a lot of these traders are positioning themselves, to profit from the election-led pop. Here, would you advise profit or booking some profits on the likes of IRFC, IRCTC maybe, and some of the other railway names?
Well, partially, yes. Book out partially, but then you might want to hold on to some of the quantity for tomorrow. Other than that, I think these pockets are now starting to become stretched and selective. So, for example, in IRCTC was seeing some long build up, but then fizzled out quite a margin. Some of the other names are also seeing profit booking. A couple of stocks that we like in this space are Textrail and JWL Jupiter Wagons Limited. So any kind of dip that I get, in these names, I'll use a buying opportunity. But if I have an existing position, yes, I won't shy away from taking some money off the table today and the rest of it perhaps tomorrow.
Right. I think this wraps up our query segment. But Kush, before I let you go, I know you have already mentioned some stock picks, in the run-up to the big verdict tomorrow. But I would like you to reiterate which are the stocks that traders should look at if they want to profit from this election-led up move.
Well, I think we're seeing some sort of a profit booking on BHEL, so that is on our radar. That is something you can consider. I am looking at markets beyond the elections as well. So Jyoti CNC is still very much a strong buy for us. The targets here are 1050, 1090 and 950 is a stop loss. That's one stock that you would want to have on your radar. But I would want to reiterate, take some money off the table today, rest of it tomorrow. If you've got good profits, enjoy. If there's still some rally after that and you have that FOMO feeling, that's all right because you still stick in some profits, right? So release that moment and enjoy those profits. But other than that, I think this market is in a strong uptrend. You will get dips along the way and use those as buying opportunities rather than chasing this momentum going forward.
And in terms of an FNO strategy, Kush, FNO traders, what kind of a strategy should they adopt on the index? For the next couple of days?
Well, Nandita, my sincere suggestion is to avoid FNO, and I'll tell you why we say that. It was with some calculation that on Friday, in our advisory, we suggested that the best way to play this market from an FNO space is to go long on the Nifty future or the Bank Nifty future, and then go out and buy a put option. Because we were expecting that if the election results do come in line, then the future uptick will offset whatever loss you will have in the put option premiums. I still believe that that is the best way to go about it. The only challenge now is that the upside from here on will not be as attractive, perhaps. So you might want to, hold back. Buying options right now is not a good idea. Selling even more so, not a good idea because of the risks involved. If someone does want to play via future, the best way would still be to buy a futures and then buy a protective put. But other than that, you might want to perhaps play this via cash in the stocks side. I sincerely believe that that's a better way to go about it rather than playing it through derivatives.
All right, that's the strategy then on the FNO side. But with that, we are completely timed out. Kush, thanks a lot for taking out time and joining in this morning. It was a good day to have a chat with you. It's a 580-point up move on the index as we speak. 23,115 is where the Nifty is at, and the Bank Nifty is sitting pretty above that 50,000 mark. But with that, we've come to the end of this edition of Opening Bell. Thanks a lot for tuning in. Of course, stay tuned to Money Control as we bring you continued coverage on the elections as well as the markets. Thanks a lot. Stay tuned and have a good day.